Now we've talked about what a health savings account or HSA is and what it can do for you in a previous video. Now we want to talk about what to avoid and how to manage your HSA. What if we told you that you'll need to be able to manage your HSA through the right amount of contributions and proper spending? There are also some matters that you need to understand to avoid getting penalized, but what are those and how severe are they? This is Intelligentsia, real life advice for practical and financial goals. What we want to talk about today is how to properly manage your HSA through the right amount of contributions, what to avoid, and some other miscellaneous topics that might be of use to you. Generally, you would want to be able to control your spending and have what's left of your HSA be useful to you when you retire. Most people want to use their SHAs for medical expenses, as studies show that the estimated amount of money you need to cover out-of-pocket medical expenses by the time you're 65 is $296,000. You want to keep that $296,000 in your mind as a goal for now when it comes to contributing to your HSAs. We've talked about this in a previous video, but HSAs are generally tax advantaged through tax-free contributions, tax-free growth, and tax-free withdrawals. That said, you can fully take advantage of the fact that the money that you have in your HSAs are fully yours as long as you use it for qualified medical expenses. Remember that you don't lose any unspent funds at the conclusion of the fiscal year. Your HSA can be used right now, next year, or even after you retire. This refers to account portability and annual rollover of accumulated assets. It doesn't necessarily mean that you can't lose money. Unfortunately, the investment portion of the HSA account isn't FDIC insured, and you may lose value as a result. If your job offers a standard health plan and a high deductible health plan or HDHP, one of the many things that you can do to manage your HSA is to save the premium difference. Assume that the monthly premium for the regular plan is $450 and $200 for the HDHP. If you decide to choose the HDHD plan, you can save the extra $250 difference in your HSA each month and you'll end up with $3,000 in a year. Now you have to understand, the money that goes into your HSA is tax-free. So what you want to do is whenever you have a medical expense, it's better to pay it out of pocket for now and leave your HSA and funds intact. The reason why you'll want to do this is because you'll allow your money in your HSA account to grow tax-free over time. Granted, you'll still want to keep track of these and continue to keep records of all qualified medical expenses you incur, even if you pay for them out of pocket. You can reimburse yourself from your HSA in the future for these expenses tax-free. Now, since you'll be saving up money in your HSA, we can't always guarantee that we'll have that in our accounts due to the possibility of unfortunate circumstances happening. When you do need the money from your HSA, however, we advise that you keep track of your receipts. It's important that you keep your own copies and track your own spending of your receipts. While it's common practice for your HSA provider to have their own copies, it's not always easy to get it from them, and getting copies from them isn't always going to be possible. One way to circumvent these inconveniences is to keep track of your expenses by having copies of your receipts, making sure your transactions are secure in a digital file, and being able to track it by the amount you transacted with and the date the transaction happened. Always remember that you'll always be responsible for your transactions and making sure that everything's the way you know it. You will be responsible for meeting your deductible out-of-pocket expenses, so try to increase your contribution to allot for those expenses. This helps out in the long run, as one of the ways that you get ahead here is to develop a good long-term strategy. One thing to do is to keep some cash and invest the rest. Another way to maximize your HSA is to take advantage of their investment options. Keep in mind that you're allowed to invest in a variety of mutual funds to help your account grow over time. This is the same account that you'll be having for a long time, so if you play your cards right, you'll be able to have more than the recommended amount we've discussed earlier. Healthcare can get expensive, so making sure that we have enough to cushion our potential expenses in the future saves us the hassle and the mental toll of not having enough in the account to pay for everything. Being realistic in knowing what you need for retirement is important, as you'll want to enjoy your time after working years for it. Knowing how to manage your HSA and how to make sure that you're getting the best deal you can get with it is important, but it's only half the battle. Another important thing to understand is that there are limitations to your HSA. Considering that there are instances where you need to be sure that your purchase is HSA approved, we need to know what happens when a purchase isn't. You have to understand that if you withdraw money for a non-HSA approved purchase, like a piece of candy or anything that isn't related to healthcare, the amount withdrawn will be subject to ordinary income tax. You'll also incur a 20% penalty on the amount you've withdrawn. This penalty is normally called the early withdrawal penalty. Another thing to avoid is over-contributing to your HSA and make other non-qualified purchases. The best thing to do here is to correct this immediately by either withdrawing the excess amount or repaying the funds immediately. The consequences for doing so would be through additional taxes and penalties. The regulations for these, however, vary from state to state. While the punishment does differ and may vary in severity, it's still best practice to try and keep track of your contributions and withdrawals. If you deliberately use your funds for non-HSA approved purchases, you may be subject to other legal problems like fines and even other charges. Express intent to deceive or defraud the IRS often ends up in serious penalties with criminal charges involved at worst. We also mentioned earlier that it's important to keep receipts of everything for verification on your end. Well, it's also important to have those in the event that you get audited by the IRS. Being able to demonstrate that your withdrawals were for HSA approved expenses saves you a lot of money and time in trying to correct this. Failure to provide sufficient documentation often leads to penalties and back taxes. It's crucial that you use your HSA funds exclusively for qualified medical expenses. These terms are defined by the IRS in order to avoid penalties and tax issues. Some examples of these are doctor's appointments, prescription meds, and certain medical supplies. You can check the IRS's publication 502 for a comprehensive list on what you need to loan, including the eligible medical costs. Another way to go about this is to speak to a tax professional in order to understand your individual situation. That said, since you'll be keeping this account up until after retirement, it'll function as your typical IRA or 401k. When you reach the age of 65, it gets more lenient when it comes to withdrawing your money. For one, you get to withdraw money for non-medical related matters without the penalty applying for you. However, if it's a non-qualified expense, you'll still be taxed on withdrawal similar to how you would be on a traditional IRA or 401k account. Now today, we've talked about managing your HSA account and maximizing its use and things to avoid when using your HSA funds. There are still many other things that you can do with your HSA funds, but those are the most important ones that you need to start off with. It's important to understand that your HSA will stay with you for a long time, so keeping up with contributions is a lifetime process. But you'll be rewarded with a more worry-free lifestyle when you retire. If you enjoyed this video and found us helpful, please hit the like and subscribe button. We'd like to be able to grow alongside you, and we're pumped to have you in our next video. Stay mentally healthy, and let's get financially fit together.